The average sold price in Brampton just dropped below $900,000 for the first time in years. According to the latest data from Zillow, homes in Brampton are now selling for around $899,000. That's 8% lower than January 2025. But here's what nobody's talking about. Condo apartments have taken the biggest hit, and it's about to get worse before it gets better. Let's break down what just changed and why everyone's talking about it. Here's what the numbers show right now. Brampton's average sold price sits at $899,000 as of early January 2026, down from over $1 million just a year ago. Wow.ca reported the November 2025 average at $914,161, a 10% year-over-year drop. RE/Max 2025 year-end data shows the average residential sale price fell 6.8% across all property types, from $1,011,198 in 2024 to $942,458 in 2025. The breakdown by property type tells the real story. Detached homes in Brampton averaged $1,083,000 in August 2025, according to the Brampton Real Estate Board. Townhomes traded around $774,000 to $827,000. But condo apartments, that's where the collapse happened. Average condo prices dropped to $433,346 in November 2025, down significantly from peak levels. Listings increased 19.6% year-over-year. Sales transactions dropped 12.9% in 2025 compared to 2024. Days on market climbed, and the market shifted hard into buyer territory. Numbers don't lie. Brampton went from a seller's market to a buyer's market in less than 18 months. Condo apartments took the hardest beating in this correction. Data from multiple sources shows condo apartments now trading in the $430,000 to $495,000 range across Brampton. That's a massive drop from where these units were selling just 2 years ago. View Homes reported a median condo list price of $675,000 in January 2026, but actual sold prices are coming in significantly lower. The reason? Inventory flooded the market. According to Urbanation, the Greater Toronto-Hamilton area saw record condo completions in 2025, around 31,400 units delivered to market. Brampton got hit with a wave of newly completed buildings all at once. New condo sales across the GTA fell to a 35-year low in Q3 2025. Only 319 units sold in the entire Greater Toronto-Hamilton area during Q3, the lowest quarterly total since 1990. Sales dropped 92% below the 10-year average. Sean Hildebrand, president of Urbanation, didn't hold back. He went public saying the market has entered a phase that is wreaking havoc. Project cancellations are mounting, construction starts are collapsing, buyers are losing money, and developers are facing difficulties with closings. And this is only the beginning. More completions are coming through early 2026 before the pipeline starts to dry up. Here's the part that's changing everything. Investors who bought at peak prices are now forced to close on units worth less than what they paid. Reports from property managers and mortgage brokers show appraisal gaps ranging from 10% to 30%. Buyers who signed contracts in 2017 and 2018 when developers were selling pre-construction units at over $1,400 per square foot are now seeing appraisals come in at $900 to $1,100 per square foot. That's a brutal haircut. Buttonwood Property Management reported in late 2025 that investors who were told they could assign before occupancy and never need to close are discovering a very different reality. Lenders are coming in below the original purchase price. Buyers are being forced to inject additional equity at the last minute just to meet loan-to-value requirements. For some purchasers, the choice became stark. Find extra capital or risk losing the deposit and face a lawsuit with the builder. Many are walking away. Others are selling at a loss just to get out. According to industry data, investors who bought during the 2017 to 2018 boom believe they'd flip on assignment. But construction delays, financing hurdles, and rising interest rates killed that plan. The The Bank of Canada raised rates 10 times between March 2022 and July 2023. Mortgage carrying costs more than doubled. Now, those units are completing in 2025 and 2026. The market flipped. Buyers panicked, and sellers rushed to list anything they could to avoid being stuck. Student and newcomer demand, which had been driving Brampton's investor market, cooled off with the foreign buyer ban continuing and lower rates of foreign students entering Canada. Economic uncertainty and job insecurity in Brampton's trucking industry added more pressure. Investors started selling to drop underperforming inventory. The situation got messy fast. If you own a home in Brampton right now, here's what you need to know. Your home value likely dropped 5% to 10% year over year, depending on property type. Detached homes held up better than condos. Townhomes fell somewhere in the middle. The market is now firmly in buyer territory. The sales to new listings ratio sits well below balanced market levels. That means buyers have negotiating power. If you're thinking of selling, you'll need to price realistically or your home will sit. The good news? Interest rates are coming down. The Bank of Canada cut rates multiple times through 2024 and 2025. Mortgage rates that peaked above 7% are now trending lower. That should bring some buyers back to market. RE/MAX predicts a 2% price increase going into 2026 compared to 2025 levels, with sales anticipated to rise 4%. The market may have bottomed, but recovery will be slow. As of January 2026, the Brampton market looks completely different than it did 2 years ago. Inventory remains elevated. Condo completions will continue through early 2026 before dropping sharply. Urbanation projects completions will fall to 17,487 units in 2026, then potentially below 10,000 units annually by 2028. Construction starts collapsed 88% below historical averages. Right now, first-time home buyers are targeting townhomes in the $600,000 to $700,000 range. Move-up buyers are looking at detached homes from $800,000 to $1,050,000. Renters are staying put as economic uncertainty continues. The tone shifted fast. Agents were shocked at how quickly listings piled up. The market cooled instantly. Everything changed in less than 12 months. Economists are warning that while 2025 brought price corrections, 2026 could see a supply shortage developing by late 2027 or 2028 as fewer projects break ground. The market is setting up for another cycle. This shift has every homeowner watching closely. And that's why homeowners, renters, and investors are all on edge right now. The Brampton market went from red hot to ice cold faster than anyone expected. Condo prices collapsed. Investors walked away from deals. And home values dropped below $900,000 for the first time in years. The market is shifting faster than anyone predicted. If you're in Brampton real estate, whether you own, rent, or invest, you need to stay sharp. This story isn't over yet.